Welcome, traders. Remember, I'm recording this for Monday, the 7th of August. Here we are in August already. I don't know about you, but we haven't had much of a summer. But then I guess some of the world is on fire, so I can't really complain. So again, the theme for now is really much more about inflation. And so what I'm going to be focusing on this week will be anything that is potentially inflation related, which could lead to a recession, those kinds of connections, and therefore that would be, say, for example, unemployment claims, certainly CPI out of the US. Also going to have a look at GDP for the UK on Friday. So a lot of this is predominantly on the back end of the week. That doesn't mean that the markets won't move. The markets could move like crazy. It is possible we're going to have a little bit of a correction on the indices. I'll take you through that in a moment. And so there's always going to be reason to be cautious, but in principle, obviously if we're doing our technical analysis and we have a trading plan and we have a strategy, then we should be okay with that. So let's move on and have a look. I forgot to clean this graphic up. I apologize. Let's move on and have a look at the charts. So having a look at the volatility index, the VIX, you can see it started to move up a little bit here. We can see we've got a bit of a bullish weekly candle here off the bottom. Makes sense within the fact, because we've been at these lows for a while. Is it significant at this time? No, I would not say that it is. I would say that I would look again. I would wait for it to start to breach these levels up here before I would take it seriously. We can actually move up and down within these levels with actually not much else happening, so I wouldn't take it too seriously at this time. I'm just going to comment on that and say that that is something that has happened in the last week. And so if we have a look at the dollar index, we can see it is still sitting above that $100, which is a significant sort of line in the sand. We've pulled back down, potentially to test support this week. So we are sitting at a key level. So what I'm going to be looking for this week is to see whether we break through this level, start to come back down. We just confirmed that we don't really have a trend. We've sort of got a bit more of a bearish trend on that weekly and on the monthly, but we've tapped a very strong support level. And so therefore we could ping pong around here, and I want to be cautious of that. So if we break through this, meaning we get a stronger euro on Monday, which is a possibility, or do we find we have support? So maybe what happens is Monday we start out with a stronger euro and we finish lower for the day, which sets us up with a bullish candle on the dollar index, therefore hinting at the attempt for it to break to the upside. So it has a shorter term uptrend here, and that's really what I'm going to be looking for. So looking at euro dollar to compare it, we're sitting at that 1.1 level. On the weekly, we're a little bit more bullish. So will we come up and break the high? And this is where I would pay attention: is do we break the high of last week, which sits at 1.1046? And if that's the case, then we are likely to see a weaker US dollar and see a continuation of that push higher. So it might be interesting just to mark the highs and the lows of last week's candle, just to see where they are. You can see it's a relatively tight range. Do we break above the high? Do we finish down with that? And that should become clear, I would say, ideally by Tuesday at the latest, but Monday, and so therefore that's just what I'll be looking for. Moving on to sterling, also again, sitting near a level of support of a previous level of resistance, and therefore we could find ourselves finding support and continuing up. So we've really got a divider, a fork in the road for both the weekly and the daily, and it's going to have to decide ideally pretty quickly what it's going to do. Next up on my list is the Aussie dollar. It's a little bit weaker than the rest of the currency pairs, and therefore this could be of interest for shorting opportunities, especially when you look at that monthly. You can see the failure on those wicks, and therefore there could be some moves to the downside. So Aussie crosses, Aussie pairs could be of interest there. Kiwi also weak compared to in comparison to the Australian dollar, but not necessarily going to offer the same opportunities. So, but Aussie and Kiwi pairs, just as Euro and GBP pairs, can often do very similar types of things. I'll have a look at them, but first on my list will be the Aussie dollar. Dollar yen. So dollar yen is at an interesting place. It's in an uptrend on the daily. You can see a little bit of a failure from last week's candle, and we're actually ping-ponging around here. We've got wicks the previous weeks, and then we've got a wick last week. So it is battling, and definitely I'm going to be cautious with the yen crosses this week because of this. I do think it's a possibility that although we've had a longer term trend to the upside with some of the yen crosses, I think we're at a little bit of an inflection point here, and we could ping pong around a while before it decides to either continue up or change direction, and so I'm extra cautious on that. Obviously, if a few days in we start to see a very strong clear direction, that's a different thing, but for now I expect it to be very choppy. Dollar Swissy, to me, is a little bit overextended to the downside. I'd love to see it continue to the upside, but what I'm going to be looking for here, we've already got a bit of a wick and some failure. Therefore, this might be the resistance level for this week, and it might continue down from here. So there could be that monthly is looking, for me, is looking quite somewhat bearish. And I think, especially when we sort of tend to close halfway down the candle, even though we have some wick here, it's not a strong close, and therefore there's still some bearish momentum in that inherently, and so it could continue down. Whereas, excuse me, dollar CAD to me is looking much more bullish. It continues to look very bullish, lots of bullish divergence. It's a general downtrend on the monthly, but all of these wicks over here imply that there's a lot of support below this level, and it doesn't really want to go much further. And we've got a really strong bullish candle here. So what there's again another line of support resistance. What I want to see this week is a continuation to the upside, certainly working its way up to 1.36, I think is feasible. So to add to the list of charts that I'll be looking at will be Aussie and CAD pairs. Okay, CAD crosses. Some of those are looking relatively decent. Maybe have a quick look now and see if there's any that catch my eye. So, for example, here is EURUSD, quite like that, relatively nice bullish continuation. It's had a bit of a correction on the monthly. It now looks pretty good to continue to the upside. Let's see what EUROCAD looks like. EUROCAD also looking very nice and bullish, and a nice little, let's call this a tweezers or double bottom here on the weekly, and a nice bullish, almost engulfing candle, hinting at the idea that it's got some room to move to the upside. So those examples of charts, especially on the cross pairs, that will that I'll be keeping an eye on and looking out for either day trading opportunities, but most likely more so because I need a retracement, which will come later in the week. Gold, I quite like this. We've got a bullish engulfing candle sitting off a level of support. Not a lot of clarity on the weekly, I might add. It's actually a bit more range bound, but I've highlighted this green box here as an area where I think it could find support on the monthly, and therefore it is a valid area for it to move up from here, but I would really like to see it sort of break that downtrend on the daily, or that angle of momentum on the 4-hourly. So I'd really need to see a significant kind of a move to the upside there. But in principle, I'm more bullish on this than bearish, even though there is a downtrend this level could hold. If, on the other hand, we just immediately break below that low, then obviously it's failing. But it's setting up as though it wants to attempt to turn around. Let's see what silver's looking like in comparison. Silver is weaker here. You can see it just really failing to get past that resistance level. And it's monthly also looking particularly weak there. So it's a downtrend there. So not seeing that kind of strength in silver. So it's not a very, very strong expectation, but I can see that it's going to try and move. And then we'll see how, if it manages to succeed on that. All right, so Brent crude delivering, or at least crude oil's delivering. Nice little pullback there. And now it's sitting at a key level. So it's a little bit of extended from a weekly perspective. We've had about 6-7 candles straight to the upside. Monthly's looking okay. So I'll be looking potentially for a bit of a pullback here, or continuation of a pullback, but nonetheless looking for opportunities to the upside there. Brent crude as well, also looking good. So crude oil's to me looking very strong at the moment. You know, we'll see when they hit the higher levels here, but for the shorter term, they look very good, and certainly on my watch list for shorter term pullbacks. You know, entry opportunities, again, always according to that strategy, managing risk, but they look certainly clearly more bullish than bearish. Okay, so here we are. We arrive at sort of the MVP, or at least this one I want to have a look at. So we've got the indices here. They've had a really good couple of weeks run, and now have produced a swing high. So this week, if we break the low of this, I'm expecting us to come back down in towards these old highs and find support, potentially around, say, 35,000 for the Dow. Overall, again, it's still more bullish than bearish, but it's more choppy, and I think it's going to remain choppy for a while. We don't necessarily have a clear run. In principle, I still lean more bullish than bearish, but I also want us to have a bit of a correction. If we have a look, for example, at some of the other indices, they are definitely overextended, and they must have a correction at some point. So here, just a very nice, relatively clean weekly retracement over here. On the S&P down towards the moving averages, back in towards, say, 4,400. And that monthly as well. So even a move potentially as far as 433.0. So it is possible that the early part of the week could see a more aggressive drop down towards, let's say, that daily 50-period moving average, and then see it recover midweek or by the end of the week. So if we close, if we close right down by the end of the week, I'm happy with that, because for now I do expect us to have a correction. And it's more about where it corrects to than how long it takes to get there. And usually the corrections are a lot faster. So again, looking at the NASDAQ, very good run for the moment. Would love to see it's been stumbling here a bit, because it's become a bit sort of overbought, if you want to put it that way. I need to see it have a bit of a correction. And the further correction to the downside, the better. So if we could come down as far as 14,000, I would be ecstatic. Why? Well, because that would represent somewhere along the 40 to 50% retracement or correction to the downside, find some support, and then have a really good run up to the upside there between, say, now and November, for example. September's can be really rough months for the markets, but if we can, and that is a possibility here as well. So at the very least, I'd expect moves, corrections to the downside, and potentially more choppiness this weekend, exercising some extra caution there. More experienced traders will do one of two things. They'll either say, look, I'm not going to engage in this at all because it's too choppy, and I know that because I have experience, or some of them will go, I'm actually comfortable with this kind of choppiness, and I'm happy to navigate, and I have a strategy that allows me to do it. But you can see again that mini Russell here, Russell 2000 also showing exhaustion. Sorry, my fiance has arrived home, and the dogs are excitedly greeting her, in case you're wondering what the screaming is in the background. And so a correction down here towards 1900, 1950 would be much appreciated. We need to have it. We're going to, every 2-3 months in a bull market, we need to have a nice strong weekly correction. It sets us up for really nice entry opportunities. And again here, the FTSE battling a little bit in this area, but all that makes sense within the bigger picture, which is what's going on with all the global indices. So here as well, we could see with the DAX also have a bit of a correction here. So what I'm paying attention to here, which is noteworthy in my opinion, is the kind of the general topping out of the markets in this area. So this combined with a bearish divergence is hinting at potentially a much deeper correction, at the very least potentially down towards say 15,000. Maybe a little bit further. So is that going to happen this week? Well, we're going to find out. But obviously, the signals are there that would set up, will create the basis for that to happen. And then having a look at Australia's ASX, these are the kind of things that should be a little bit alarming. That's sort of a double top. But the divergence isn't that bad, so this is a temporary kind of thing. It just looks choppy. They signal potential choppiness. Right, the Nikkei, have a look. Yeah, again, I'd still love, you could look at that month here. We started that swing high. If we break the low, actually the low of this that would be interesting would be the low of July, and then to see if we break that should signal a move down towards it. So if that happens this week, that's good. Remember, those are natural healthy pullbacks, corrections within the market. Profit taking and whatnot doesn't change the fact that it's a bull market or a bear market at this time. Okay, let's move on and have a look at equities of interest. So Apple's had an incredible run and finally has now triggered a decent, healthy correction. Love the fact that it's closed right down near the lows. And again, I would love for this to come back down to 177, 167. These would be fantastic entry opportunities to see that turn around. That is definitely something I'd like to see happen. So I'll exercise some caution on those and wait to see for that to slow down. Then we have got Amazon had the opposite. It gapped up, relatively nice bullish candle, but had a bigger, deeper correction in through 2022, and it's kind of working its way up. So it kind of deserves to have a little bit of a jump there, and it's got a strong level that it's just sort of bumped its head up against. So you can see it's had a weekly retracement here. It's connected through to the moving averages. It could potentially now it's got a battle to get to this level. I don't know if it'll manage to do it this week, but it isn't necessarily that isn't due for a correction. Then moving over to AT&T in the US, that's just continuing to tank through to the lows that maintains its bearish look. So be it. We've got ARC as well, is still trying to get through its level. You can see it's had a relatively rough week here. So if I compare this to something, say Apple, we'll have a look at Tesla as well, because we know that ARC has some of those tech stocks within its portfolio. But if I have a look at this, it's not that strong, but it is still at least in an uptrend, and it could potentially hold this level. It could still come back down to this level. That would still qualify to my mind as still strong. But because it was range bound here, I'd really like to see it, and at least range bound here, I'd like to see if it could stay above that. So a nice little green candle next week would be a positive sign for me. Glencore still battling within its range, but still more bullish than bearish, just very choppy. Tesco had a bit of a correction here. This is an area I'd like to see it, continue up from here. There's not a lot of clarity on what's happening here. It actually looks weak. I'm going to remove this because it looks as though it could potentially continue lower. So we'll see what happens with that. Then we've got Amex ping-ponging between these levels. This also looks weak. It does look as though it's got that potential to head a little bit lower. Berkshire Hathaway overextended to the upside. So have a look at this on the weekly. There's a lot of clues here. We could see manage to break through this level here, retest it, go through, battle here, breakout here, keep going, and then we've had a bit of a rejection here. So for me, again, this would be lovely to see this come back down towards 340, even as far as 330, but 340 is probably a little bit more likely, and then continue up from that. You can see that monthly is doing relatively well. But just compare the candles here, much bigger than the ones we have had here. So again, wouldn't mind it just coming back a little bit before breaking out. If it manages to break out, so be it. It's not ridiculously overextended on the weekly. It's not overextended on the daily. And even on the monthly, I don't think it's that bad either. But I would like to, but it makes sense. Based off this reaction and this level, we might see a bit of a pullback. Coca-Cola, strong reaction there again within this area. It's similar to when I was looking at Amex. It's not looking super strong. It's likely to keep going, I'm sure, but this is quite a bearish candle, so it's very choppy here. Let's see if it could just stay above this level, that $60 level. Let's just put that in and see if that can just stay above that. BP and Exxon, they're just ticking along. Nothing major there. Still range bound, trying to break up. It's very likely, it's more likely that if we see crude oils continue to strengthen, we'll also see these ultimately break out to the upside. But it does seem to me as though they're not, crude oils have had a really good couple of weeks, and we haven't really seen these things take off, which is interesting because that usually is highly correlated. General Motors also still range bound, therefore much more likely to potentially continue down this week. It's not able to get out just yet. We've got bit of a stall here, so you can see the wick starting to kick in, exhaustion, and then we've got the indecision candle, so a correction to the downside, a break of the low. This could see that correct to the downside. And again, it's had a really good run, just a little bit of a correction to the downside, not even necessarily back down towards these lows here, just even towards even where it is, actually a 150 would be a nice gentle tap. It's looking strong overall. Adidas is managing to keep pushing to the upside, slowly but steadily managing to do that. Meta finally showing a little bit of exhaustion, showing in here long overdue. This is solid institutional, an advanced kind of buying happening here. This is just too orderly for it to be random retail investors as well. I'm sure they're in the mix, but we can just see it. It's just ridiculous. It's just so steady. At some point, I'm sure we'll find out who that is. We'll be able to get access to it if somebody does a deep dive on it as well. Also stalling here, you can see a candle up and then a failure, then a candle up, and it's sort of starting to come back down. So again, a correction here would be really healthy. To see it come back down to 250 would be very good for it to do that. Any further would also be okay, but at least 250 would be very good for it to do that. Morgan Stanley, overall, just very choppy. All right, so any kind of a move down sort of makes sense. It's not looking super strong. NVIDIA also, as I said, highlighted this area for a while now. This is where I would expect it to kind of run out of steam, close to the 500 level, 450, 400 level. It's definitely very overextended. That idea came from these previous moves. And so you can see it's been stalling now, I would say probably for about 6-7 weeks. And there's a good opportunity for it to close with a nice bearish candle. And from here, where would I like to see this come down to? At least back into the old highs, back down to 300, back down to 200 would be amazing, but a little bit on the far side. I think 300 is a feasible area for it to pull back to and still be super strong, by the way. Netflix, just battling here, really battling here. So again, we've got a bit of an indecision candle here on the monthly and a correction. A little bit lower, 375, even as far as 300. That's far, but it depends on the correction. So we have a look at PayPal. PayPal's just battling. Sorry, buddy. I always feel sorry because I've been using PayPal forever. I came from South Africa, and the first two things that I had that were non-South African accounts was an Amazon account as well as a PayPal account, where you start kind of dealing with different currencies, that especially when you emigrate, you just, you have those kinds of things. And so I guess I just have a sentiment kind of attachment to it, but yep, battling. And so not expecting very much from it here. It really was trying to break through this level, and it's just kind of dropped back through that. At this point, again, I would sit at that 60 level to see if it's going to hold. I'm just going to mark that. That would be what I would see if there's support, but it could continue down there. Spotify, also a bit of a correction here. Again, this could even come down potentially as far as 117. We've got Spider that looks more and more bearish. Again, I expect that to head lower. It's looking more and more bearish. A little bit of a head and shoulders pattern here. So back down towards these highs again. Remember, guys, if it's going to happen, it's a good thing for investors longer term. These are buying opportunities. And we'll assess as it happens how bad it is or how serious it is. But a lot of these, that's why I'm highlighting the levels, because if they have those reactions, whether they reach it in a day or reach it in 3 weeks, believe it or not, that it's just how they behave when they hit those levels. And invariably, stocks tend to fall very quickly. So here again for FedEx, pullback down into these highs here, 230 would also be acceptable, but a little bit further down, or a little bit less further down, 250 is also good. Let's have a look at Tesla. Tesla battling in this area, but this is fine. This is not a surprise. It is in an uptrend on the monthly. And here, a potentially decent area for it to pull back to and these are, if we do big moves to the downside, we would see this potentially down to 230, possibly even down towards 210. Okay, it could be the case if that's going to be it. So you can see a lot of the markets are looking more bearish than bullish, and of course the media. When I say the media, I just mean Twitter posters will highlight, potentially talk about specific stocks and why they're collapsing. But what you can see is that a lot of stocks have had a really good run, and a lot of them need to have a correction. So right now, I would take everything with a pinch of salt and look at everything. I would look at a basket. I'd look at sectors. I would look at industries. I would take everything, what's happening in terms of correlation. Here, for example, Vanguard as well, S&P, this should come down to 400, down towards these highs here, even as far as 372. Like I said, even a big correction like that is not a reflection of the strength of the market. It's a really nice place. It usually implies more profit taking, because then buyers are going to come in here at these levels and it's going to go. And what could happen is you could have a big drop down here, and then you could have a massive move that doesn't stop for several years. So that's why I say that the deeper the correction now, if there are no other signals that indicate big problems, in other words, it just appears to be a temporary correction in the market, then it could represent a really good buying opportunity for people who missed the first move. They're waiting. This is going to be that very first pullback on the monthly within a new bull market. Therefore, and actually the 50-period moving average would be, to me, a good indicator. If it drops below the 50-period moving average on a lot of the indices, that would then be a cause for, not alarm, but cause for reevaluation about what the state of the market is. A lot of them should not exceed that. But if they do, we'll deal with it then. Okay, bonds trying to find a bit of a floor here, which makes sense within, and bullish divergence, which makes sense within the markets we've just had a look at. We could see a bit of an increase in bonds if we're going to see some buying there. Okay, and then finally, let's wrap up on cryptos. Cryptos will take a hit, no doubt, if that is going to be the case with the others. And they're looking relatively weak. They're testing support. They didn't actually have a big move to the upside with the tech stocks. We'll see what happens. They're probably seen as a luxury right now. In other words, meaning that when a lot of the portfolios have got back up to old highs, they might find that they start to explore and experiment a bit more with their favorite cryptos. Right now, they're looking weak, and I expect them to head a little bit lower. One was Anheuser-Busch. Just have a look at that. That's fine. Okay, so my expectation, just to sum up this week, waiting to see what actually happens with the dollar, but with regards to a lot of equities, my expectation is there's a lot of signs that show that the market wants to hit a little bit low, shrug off a bit, take a bit of a breather, and have a nice correction, then find itself, and then potentially start to climb back up. So the question is it going to be something that lasts for about 2-3 weeks, or is it something we're going to have to deal with that only really recovers after September? And unfortunately, there's only one way to know that for sure, and that's to take it week by week. So that being said, please take care. Have a great week, and I will chat to you next week. Thank you.